Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. On this channel, we cover dividend growth investing. We cover my portfolio. I do a stock portfolio update every Sunday. I have a stock pick of the day series Monday through Thursday where I cover a stock that's pulled back on the day. I also do videos like this one. We are going to take a look as we roll from May into June at 5 stocks I'm looking to continue to add to my portfolio, maybe one that I'm looking to pick up, and then one ETF to potentially buy in June. And the ETF really is not for me, it's for my daughter's custodial accounts, but we're going to cover it anyway. I don't really cover a lot of their content on here or their investing portfolios on here, but this is a pretty unique ETF that I wanted to take a look at, so I thought I'd add it in along with Williams-Sonoma, which I have been running options on and have some shares in my portfolio here already. So I want to continue to add there. Pfizer, another one I have added recently into my portfolio last month. I want to continue to build out if it remains pulled back. Nutrien is not in my portfolio, but we're going to take a look at it. Sibanye-Stillwater, another one I see great value in. This is a mining company here, and one probably a lot of you are dividend growth investors out there are well aware of. Realty Income, the monthly dividend company, right? The monthly paying dividend REIT. So let's jump in and take a look at these on a little deeper dive. And hey, if you have not joined the Vested Interest community, you have not joined us on our journey to financial freedom, go ahead and hit that subscribe button down below and hit the notification bell so you're notified whenever we put out any new content. Again, that's what we cover here, dividend growth investing, my dividend stock portfolio updates every Sunday. And then let's jump into this video here about the 5 stocks and 1 ETF, maybe to buy in June. This is my investing criteria, right? You want to understand the business, growing free cash flow the last 5 years and expected into the future, a growing dividend payout ratio of 75% or less. Does not apply to REITs because they have different criteria. They have to pay out 90% or more to qualify as a REIT, or BDCs or some other companies like that. I check the valuation based on dividend yield theory, whether it's above or below current value. All right, I want to pick them up below current value, or what dividend yield theory says would be current value, right? Current yield above 5-year average, buy, it's undervalued. Current yield below 5-year average is a hold, it's overvalued. Current yield equal to 5-year average would be fair value, and I would say that would be a hold as well. Though if you can pick up a great company at fair value or undervalued, that's when you want to do it. Buy below current cost basis or within 15% of the 52-week low. Great return on invested capital, ROC, or return on equity, ROE, equal or greater to their industry average or 10% plus. And for financial companies, I add this last one in, price to book. You can use price to book for all of them, but it is specifically tailored or should be looked at whenever you're looking at financial companies, and 1 or lower is really undervalued. All right, note down below, must meet 4 of the 7 to be investable. For financial companies, must meet 5 of 8. That's my investing criteria on a high level. Obviously, I want to do more of a deep dive there, but to see if I am even interested in adding a stock or continuing to add it if it's already in my position, it must meet 4 of the 7 or 5 of the 8. So first up on the list for stocks that I am looking to continue to add to my portfolio, Pfizer. This one is one in it. You can see down here at the bottom, here's my position. I have 149 shares currently. I am down 3.17%, so I do not mind adding to this and continuing to bring down my cost basis as long as it is below my cost basis of $38.83. So as the close of business on Friday, it was at $37.60, so obviously it's down below my cost basis here. Looks like it was up a little bit in the after hours right there. 52-week range as low as $36.17, as high as $54.93. Looks like they estimate it's near fair value. I won't go over the value because that's specific to Friday and not really important now. Market cap, $212.264 billion, a beta of 0.59, so it is less volatile than the overall market. Price to earnings, PE ratio of 7.42%, low PE here. Earnings per share, EPS, sitting at 5.07. Nice earnings per share number there. Earnings date, the next one is going to come out sometime between July 26th to July 31st. For dividend is $1.64 paid out on the year. They are a quarterly payer, so divide by 4, or we can see it over here. Do I have that? Nope, I don't have that particular one. Just divide by 4. That'll give you the quarterly dividends on that one. Has a very nice dividend yield, 4.36% here. And the last ex-dividend date was May 11th. So if you bought them now, you would not be in line for the next dividend, right? The payout date will be around June, but the ex-dividend date was May 11th. So that's already passed. 1-year target estimate of $47.06, at least according to Yahoo Finance. They feel it's about 2% under fair value. This is more for trading, but they think it's a bullish pattern here. The next short to midterm length, and then long term maybe down again, relative strength index. That's what they're telling you here. That's again more for traders, maybe a swing trader looking to profit on the way up or something like that. But anyways, another one, some other information on Pfizer, right? We want to look at dividend yield theory. So we look at the 5-year average dividend yield, 3.61. The current dividend yield, 4.36, or forward, but it's the current, right? 4.36, they're the same. And if this number is higher, which it is, 4.36 is higher than 6.1, it speaks to some undervaluation on this one, at least according to dividend yield theory. Another one that we like to look at, again, if you paid attention to the slide on my criteria there, return on equity. This is sitting at 30.90. We look for 10 or above, so that's smoking, right? That's very nice. Return on invested capital, same thing, 31%. We look for 10. Very nice numbers here. Free cash flow, 2019, 9.9 billion. 2020, 11.6. 2021, big jump up to 29.8. And then a drop from 21 to 22. This would be the C19 issue right here. So you would expect the drop down because they're going to start to level out. That won't be as big of an impact. 26 billion, but overall from 2019 to 2022 there is growth there, so nice to see. I am long Pfizer. This is the first one on our list. It looks, I really like it. I think the numbers look great. I'm going to continue to add to this one so long as it stays below my cost basis. Williams-Sonoma, this is one I want to own long term that I am running a wheel option strategy on. I've made over $800 in option premium over the last month. I'm going to continue to do that. It looks like it closed out the day. Williams-Sonoma, ticker WSM, is out of the consumer discretionary sector. And if I did not mention, Pfizer is PFE, ticker PFE, out of the healthcare sector. But back to Williams and Sonoma, closed out the day at $113.61. 52-week range as low as $106.66, as high as $176.89. So speaks to some potential upside appreciation if it got back up to this 52-week high. They think it's 8% undervalued here. That's what they're showing you there. Market cap of $7.296 billion, a beta of 1.6. So they are very volatile. You can see some of that volatility overall last Friday there. 1.6, that's a very volatile stock, right? So big swings here. Good one to be doing options on, right? Price to earnings, PE ratio 7.49. Another one, very low PE ratio. Earnings per share, very high, $15.17. Next earnings date, sometime between August 22nd and August 28th. Nice forward dividend, $3.60 divided by 4. They are a quarterly payer. Nice dividend yield of 3.17%. Ex-dividend date, the last one was April 20th. Looks like they paid out May 26th, so they just paid out. So you would be in line if you bought them now for the next dividend, right? And 1-year target, at least according to Yahoo Finance, of $123.55. So again, speaks to some potential upside appreciation. Doesn't look like they think it'll get back to its all-time high, but it does look like they see some upside here. Again, for traders, you know, they see it going down over the short, midterm, and long term, right? Especially if we go into recession, I see that could be the case. Let's look at dividend yield theory again. 5-year dividend average, 2.32. So we look at the forward dividend yield, or current, right? Same thing, 3.17. It's higher than the 5-year average, so again, speaks to some potential undervaluation here. That's why we're looking at it. Very low payout ratio, 21.36. I didn't cover it in Pfizer on the previous slide, but you can go back to it if you need to. It's in the 30s, so another low payer there. So low payout ratio, you're going to notice this theme here over the next few slides, except for Sabini-Stillwater, which will be a little bit different. All right, return on equity, another one that we like. Remember, 10% or above is what we're looking for. This is smashing it. Return on equity, ROE, 70.31. That's amazing. Return on invested capital, ROIC, 35.60. That's awesome. Right? Free cash flow is what we want to look at as well. 2020, 421,000. 2021, that's really 421 million. 2021, 1.1 billion. 2022, 1.1 billion. You know, a little uptick there, but pretty flat. Then a drop from 2022 to 2023, right? A lot of home goods were bought in 2022. A lot of people staying home, so I would expect a big drop in maybe from those years. So we want to watch this. And 2023 is not over yet. So this may drop a little bit, but what will the drop be? And it may not. It may actually go up, but we have not finished the year, but we're into 2023, so still positive in cash flow. Overall, from 2020, let's just say through 2022, a very nice steady climb in free cash flow, and that's what we want because the dividends are paid out of free cash flow. We want the dividends to grow over time, so we need the cash flow to grow over time. Another one I'm long in, right? It shows 2 shares, but I am running a wheel, so I have $11,200 sitting on the side. I will put a strike price of probably let's say $110. We'll go look at something under this 111.16 in the after hours there on Friday, maybe 110 bucks, and see what we can get on that one. Again, Williams Sonoma, ticker WSM, out of the consumer discretionary sector. That's the second one I'm looking to continue to add in June. Next up, Siboney-Stillwater, ticker SBSW. This is a mining company out of the materials sector. Down, closeout day $709, 52-week range $706. They are right up against their 52-week low, $13.38 for a high. They estimate undervalue of 169%, right? Estimated total return, so that's really undervalued. It's 169% undervalued. That's crazy. That's what they estimate. That doesn't necessarily mean that's the case. That just means that's what they think. And by they, I mean Yahoo Finance. Market cap of $5.155 billion, a beta of 1.27, so another one that's more volatile than the overall market. PE very low, price to earnings 5.25, earnings per share $1.35. So this one's not a screaming earnings per share like the two we saw before, but still pretty good. Now let's look at dividend yield theory. Here's one that we will not be able to use that because it does not have a 5-year average. It does have a high dividend yield, 7.51%, right? Pays out 53 cents. This is a semi-annual payer. They usually pay out twice a year. So this fluctuates over time, right? So this is not really consistent. So I don't know that dividend yield theory would have been a best or a great one for this anyway. But payout ratio 49.95%, so under 50% payout ratio. So they have a lot of room to raise that dividend over time, and it's already a very nice, healthy dividend yield of 7.51%. Return on equity, ROE, 22%. That's way above the 10% that we want. The return on invested capital, 24.1%, way above the 10% we want. Free cash flow, this is going to be up and down. Mining companies just are. 2019, $1.7 billion. 2020, 17.5, 2021, 19.5, 2022, big drop there. You'd have to look and see what's going on here. But overall, from 2019 to 2021, a lot of growth and then a big drop off here. But they do that sometimes whenever they have a lot of expenditures. They'll invest a lot of capital, maybe buying some new mines. You'd have to look and see what's going on. I am long Siboney-Stillwater. It is well below my cost basis of $9.88, so I'm going to continue to buy as long as it remains down here close to this 52-week low and under my cost basis. I want to bring down this cost basis, bring up my potential future returns, and bring up that dividend yield. That's number 3. Number 4, Realty Income, ticker O, the one everyone knows. I mean, I'm sure you all know this company, right? Realty Income, ticker O. If you're a dividend growth investor, surely you do. This is out of the REITs, a REIT out of the real estate sector. Closed the day at $58.66, 52-week low of $55.50, right up, pretty close to that, and a 52-week high of $75.11. So definitely closer to the 52-week low than the 52-week high. They actually think that this is overvalued by 28%. I don't know if I agree with that, but I like where it's at. So I'm going to continue to add to it because, again, it's another one I'm long in, Realty Income. Right, my cost basis is $62.83, so it's currently well under my cost basis. So I'm going to add a few shares, keep on nibbling in there. Let's look at it, dividend yield theory, and see if that says it's undervalued or overvalued. 5-year dividend average 4.29%. Current is 5.22. So according to dividend yield theory, this is potentially undervalued. Now, here's something you do want to pay attention to. Payout ratio 210.35%. This is extremely elevated. Right, we need to watch this. Okay, now let's look at return on equity. This is a little lower than what I'd really like, 3.2%, but you would want to compare this to other REITs, and really you want to look at funds from operations as well. I don't do that on REITs. I use the same standards for REITs, but really if you are going to fairly value a REIT, you should be looking for funds from operations. Return on equity is a little low for me, 3.2%. Return on invested capital, 2.60. Let's look at free cash flow, 2019, $1.06 billion. 2020, 1.1, 2020, 1.3, 2022, 2.5. That's why I like them. They're steady Eddie. They're growing. They're growing the free cash flow. They're growing their dividend. They have a nice dividend yield of 5.22%, $3.06. They pay out monthly. Divide by 12, and that'll tell you what you get per month. And they have a 1-year target of $69.80. So it speaks to some upside potential in the price appreciation. I like Realty Income. I like the monthly payer again. I have 128.836 shares. At $62.83 per share. It's under my cost basis. I'm going to continue to add to this one. That's just my opinion. I know they say it's potentially overvalued here, but I'm going to do my thing. you do your own thing, right? You make sure that you're going by your investment criteria. If this company is overvalued by your criteria, it is what it is. All right, last one on the list as far as individual stocks, and that is Nutrien AG Solutions, ticker NTR. I believe this is out of the either consumer discretionary or industrial sector. I'm going to have to look that up. I apologize. I don't know for sure which one. But they closed out the day $55.89. Their 52-week range as low as $55.79, as high as $102.73. So they are right up against their 52-week low. That's where I like them. They say maybe potentially 10% undervalued here. So another one that they think is undervalued. Really, all of them were except for Realty Income. Market cap of 27.726 billion. Don't my brain didn't want to work there. A beta of 0.87, so less volatile than the overall market. Price to earnings, PE is sitting at 4.36, very low. Earnings per share, very high, 12.83. Another one with very high earnings per share. Earnings date coming up August 7th. Forward dividends $2.12. They are a quarterly payer. They have a nice dividend yield of 3.79%, and their ex-dividend date not until June 29th. So you'd be able to get in this one and get the next dividend if you wanted. And a one-year target estimate of $79.10 speaks to some potential upside appreciation. Here you're looking at traders again, they feel bearish. So they feel like maybe it busts through and hits a new 52-week low. Maybe you want to watch this and see if it pulls back over the next couple weeks and we can get this cheaper. Let's see. Now, dividend yield theory, right? We want to look at the 5-year average, 3.17. It's currently 3.79. This is higher than their 5-year average. So speaks to some undervaluation here again. That's why we're looking at all these, right? There's a theme. And the payout ratio, the other theme, very low for all of these, right? 15.35%. A lot of room to grow the dividend on these companies that I've picked this particular month. This is one that I'm seriously looking at adding to the portfolio here. I'm doing a little bit more research, but a lot of numbers are lining up that I really, really like. ROE is one of them. Return on equity, 26.50, smashes the 10% that we want. Return on invested capital, same thing, 25.80. Very nice numbers. Now free cash flow, let's take a look. 2019, 1.7 billion. 2020, 1.7 billion. Almost identical. It is identical. Same numbers. 2021, 2.1 billion. 2022, 5.6 billion. I think this is a big jump up. I would have liked to see something like a 3 or 4, but is that sustainable, right? Is there the reason maybe it's down right now because we might see a drop from 2022 going into 2023 back to what should be realistic growth, right? I don't mind steady growth. If there's growth and it's steady in 2 to 3, what happens sometimes is these companies are a little cyclical and you'll have a big jump up and then you'll have a big drop down. I like this nice steady increase over time, right? But we'll see. We haven't jumped into 2023 yet, so let's watch this one. But big jump from 2019 to 2022, definitely free. Cash flow is growing, and that's what the dividends are paid out of. So it looks like they have a lot of room, only a 15.35% payout, a lot of room to increase that dividend, and a already 3.79% dividend yield. Very nice. Nutrien, it's another one that, like I said, probably going to start building this position out here this month. Now, those are all the individual stocks. I do not own any ETFs. This is not one I'm looking to add to my portfolio, but it is one that I am looking to add to my daughter's custodial accounts, both of them. And it is Vanguard's Emerging Market Stock Index Fund, VWO, right? $39.85 per share right now. It has a dividend yield of 3.74%. Very nice dividend yield. PE ratio 10.86%. Very nice. Beta of 0.84, less volatile than the overall market. And expense ratio of 0.08, not the cheapest, but not terrible either. A lot of times when you're looking at emerging markets and international ETFs, companies that invest in international companies in emerging markets like this one, they have high expense ratios. So for an emerging market ETF, and I want to give my daughter some exposure to that because I think that over time, America is a pretty built out country and we are on the down curve of the bell, right? Whether you believe that or not. And there are countries out there that are growing faster than we are. China, India, some in South America are growing faster than we are. Those are places I want to be in long term because I want the growth over time, right? I still believe in America. That's why I buy individual stocks in American companies. But I do buy stocks personally. I own Valet, right? Not this Valet, but Valet in my portfolio. I own Alibaba in my my other account, not my non-dividend account, right? So I like some of these companies here. Taiwan Semiconductor, I believe this is one that Buffett bought into and then sold out of within a couple months because he was worried about what's going on in Taiwan. But I'm all right holding this long term in my daughter's custodial account. Taiwan Semiconductor are some of the holdings: Tencent, Alibaba, Reliance, Meituan, I'd be maybe butchering that pronunciation. China Construction Bank Corp, Housing Development Finance, Taiwan Semiconductor. Again, I don't know why they have it twice, and it's a different ticker as well. So I'm not sure what that is about. It might be different share types. Sometimes companies have different share types. Type A, I know Berkshire Hathaway has Type A and Type B share stocks. So maybe it's something like that. Valet, same thing. Valet 3, my Valet is VALE, right? But I know this is the same company. And Info Systems. So those are their top holdings. They have more in there. Like I said, low expense ratio, 0.08, 3.76% dividend yield. The other thing I like, what's the theme of this one? Low payout ratio, 37.59%. Lots of room to increase that dividend payout. And 9.74% dividend growth. Look at that, 37.59% payout ratio with a 9.74% dividend growth and a starting yield of 3.74%. 3.76 here. So somewhere in between those two numbers, or maybe just multiply by them both out, divide by 2, probably 3.75. Call it 3.7. They both agree on that. So 3.7% dividend yield, 37.59% payout ratio, dividend growth of 9.74%, expense ratio 0.08. Top holdings, you can do the information on the rest, but this is one that I'm looking to maybe get a little bit cheaper. I'll probably set this up with a buy price of, let's say, $36, $37 per share. And as it drops back into the 52-week low, I'll pick it up there. You can see some of the payouts going out to 2022. I didn't go back too far, but they are paying out March, June, September, December, March. So that March, June, September, December timeframe, right? Quarterly payer. They are not always the same. 13 cents and some fractions of a penny, 30 cents and some fractions, 52 cents and some fractions, 63 cents, but they are consistently paying. So that is it. 5 stocks that I'm looking to add to my portfolio. 1 ETF I'm looking to add to my daughters. Let me know what you think. Do you have VWO in your portfolio? Do you invest in emerging markets, or do you avoid them altogether? Would love to hear some feedback from your end. Hey, happy Memorial Day. Really appreciate everyone stopping by. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have stocks that you'd like me to add to the list to do a stock pick of the day video on, go ahead and drop them down in the comment section below. I will add those in there. And any questions you have, feel free to ask. I usually try to interact with the commenters on the day I post a video. Probably won't today because it is Memorial and I've been in here a little bit, so I want to get out and spend some time with the family. Appreciate you guys stopping by. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes with those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount uncomfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.